Hey, what's going on, everybody? It is Mark with My Front Range Living, and there's another human in the video today.
How's it
and that
going?
means that we're going to have a good time. This is Troy Reichert with the Reichert Mortgage Team. Thanks for coming, buddy.
Hey, appreciate you, man. Thank you.
So, a ton of stuff going on right now in, yes, the real estate industry, that's fine, but the mortgage industry specifically directly impacts all the stuff that we're talking about on a very regular basis. So I wanted to bring Troy in and kind of talk about not only the current market, but we're going to start a series. And the first part of this series is just going to be the current market, right? And then we're going to work on assumables, and then we're going to go and we're going to talk about buy downs. So make sure you stick around for all three of these videos in this series. So let's just go ahead and hop right in, Troy. So so we did a market update last Friday, and if you want to check out the current market update, go right here. You can check that out. But we talked about interest rates. Are rates going to go down?
Wow. Okay, we're going to start right with
Let's
that.
just go big, buddy.
Let's go
swing,
big.
Let's swing for the fence.
Absolutely. So what we're seeing right now is rates are currently going down, right? And what's driving that? Well, all you have to do is really kind of pay attention to the inflation numbers that are out there. Everybody's paying more for eggs, paying more for milk, those kind of things. Right. So that's the inflation type stuff that is going on. So what the mortgage industry is looking at is that inflation number. So if we see those numbers coming down, we're going to see rates coming down. And indeed, what's going on is those numbers are starting to soften a little bit out there. So I do indeed, as an educated guess, if you want to call it that, or a crystal ball, do indeed think rates are going to go down. But I want to caveat that by saying you just don't know for sure, right? So the answer is I see a trend in which rates are going down, but definitely contact your mortgage professional to see what rates are doing currently.
Awesome. And yeah, speaking of contacting the professional, we have Troy's info for you down below in the description of the video, so you can hit him up anytime you want. So you're saying, Troy, that inflation is going to directly impact mortgage rates?
It is, and it has been, and it will be. Yes.
Oh, okay. So really, we're watching the trend of inflation. If we start to see inflation dip just a little bit, it's safe to say mortgage rates are going to be reciprocal.
As long as no other factors are messing with interest rates, absolutely, there's going to be a one-for-one correlation.
Awesome.
Down means down. Yep.
Got it. Love it. So, people are asking all the time, should I wait to buy a house right now? So on and so forth. And my response is always, do you need to? What's your current circumstances? And we're asking those questions and so on and so forth. But from a mortgage standpoint, we talked about this earlier, and you love this. Marry the house, date the rate.
Mm-hmm.
Give me some feedback on whether or not now's a good time to buy or we should wait.
Yeah, so I think you and I are aligned in a lot of ways where I look at the individual situation to determine whether that answer is true or false, right? So what I always like to do is say, hey, always have a conversation with your real estate professional and your mortgage professional to see what your particular situation is. So for instance, what I'm finding data-wise out there, statistically speaking, on average, it's cheaper to buy a home now than it was last year. What do I mean by that? So although interest rates were lower last year than they are right now, a lot of times people were paying over and above that purchase price, right, to secure that home.
Mm-hmm.
It was a bidding war out there for sure. We're seeing some of those numbers coming down a little bit where sometimes even sellers are willing to help out with seller concessions, seller help for closing costs and other type things. So the answer is what I'm seeing over the life of the loan. Let's say you paid $10,000 more to get into that house last year. If you take those numbers and you average it out, it's going to take, goodness gracious, it's going to take like 5 to 7 years to recoup the cost of that $10,000 you put in. Okay. So you want to really be paying attention to those kind of things as well. So if you're going to be in a home for a good period of time, it's actually a cheaper deal to buy a home right now than it is last year.
Which is interesting because when we did that market update last week, we were looking at the most recent numbers. Oddly enough, dude, and everybody wants to talk about a down market.
Yeah.
The average sales price of a house is still up.
Yep.
From this time last year. Like it's not, the market has basically leveled off is what we're seeing for the most part.
Yeah, absolutely. Again, we were paying over. You're more the expert on that than
I'm excited that we're not in that market anymore, man.
Right.
For sure.
Yeah, the people that paid over, there's a really good chance that even though they have a lower interest rate, it's going to take a while for them to recoup the cost of that overage.
Because it was out of pocket.
Yep.
Yeah, for sure. So one thing that I'm excited about in this current market, especially as we head into 2023, is the fact that loan limits have shifted just a little bit. So tell me a little bit about that.
More than just a little bit.
Right.
Yeah. So we saw an increase in the county loan limits, $79,000 right now. So conventional loan limits are now $726. and $200, right? $726,200. So what does that mean, really,
Right, yeah.
to the individual? So what that means is the mortgage world uses that number to make sure that that loan limit is what they're getting from a market interest rate perspective, right? So in 2022, you would get the market interest rate, right, at the current 2022 loan limit, right? So now that it's 726.2, you're going to get that market interest rate at 726.2 loan limit versus the lower loan limit of 2022. So it's a savings for folks who are looking for homes in that particular area.
So help me out here, because
Sure.
I only sell houses. You're exponentially smarter than I am. But the jumbo loans, the credit scores tended to be higher, and the loan packages were different. So upping the conventional rate, right, that conventional limit helps those folks who are right on the threshold. Yeah.
That's correct. Yeah, it keeps them out of jumbo land, and jumbo interest rates are higher. The down payments are more, right? So if you're looking in that area, and in El Paso County, Colorado, there's a lot of homes that fit this criteria that we're talking about, right? So yeah, it definitely helps some of those individuals who are in that area.
And correct me if I'm wrong, we were talking about the market here, and aren't those loan limits based on market value of homes?
Absolutely, yes. So what the industry does is they look at the values of homes and they adjust the county loan limits accordingly. So what that means is, by and large, people have more equity in their house. Their house is worth more.
Gotcha.
Yep.
So any shift in the FHA limits?
Absolutely. So conventional, once that's set, the FHA, what they do for their loan limits is they do 65% of that, right?
Okay.
So, but El Paso County is actually a little bit higher. So they do county by county statistics,
right,
and kind of figure out what's going on. So Pueblo County is at the normal FHA loan limit, but Teller County, Douglas County, El Paso County, those are all higher for that. So El Paso County is 517.5 right now for an FHA loan. So we're over $500,000 for an FHA loan allowable for the loan limit there.
And so tell me why that's a big deal, an FHA going up.
Sure. So what that means is FHA loans, an amazing product, by the way. You only need 3.5% down.
There it is.
Right. So
yeah,
you don't need as much down, and they're also not as sensitive to credit scores. Right. Still an amazing loan product. So if that's a fit for you and your particular situation, it gets you into that home that you've been looking for.
Love that, man. Hey, Troy, thank you so much. Hey, as always, everybody, we hope you found value in today's content. Like I said, if you hit that description down there below, you are going to find all the information to get a hold of Troy and ask specific questions for your criteria and what you're looking for. It would mean the world if you went down below and you clicked on the thumbs up and gave us a like on today's content. It would mean even more if you hit that bell down there and subscribe to the channel. We are putting out content every single week to help you make Colorado Springs feel like home. Hey, if you are thinking about moving to the area, you do want to talk to Troy, right below Troy's contact information, you are going to find our relocation guide. Make sure you click on that. That's going to give you some more information about different areas here in Colorado Springs that may help you make the determination as you come to the area. Hey, thanks so much for stopping by. Troy, appreciate you, buddy.
Hey, thank you, Mark.
Have a great day, and we'll talk to you soon.